How's everybody doing? It's kind of late, so I'm gonna try to push this video quickly. I'm not gonna go over too much about my previous video on the specifics. The only thing I'm gonna go over on my last video is the monthly close, since that was the topic of it. But overall, right now, cryptocurrency is breaking out. Stocks are rallying. Gold and silver are kind of being weak, but there's a lot of uncertainty with the Iran war. We got data today and yesterday that is kind of showing that the Fed has more reason to cut. I mean, not to cut, to hold interest rates, which, if you've been following me and hearing what I've been saying, we don't want them to hold interest rates. We want them to cut, okay? If we hold interest rates and then it's bearish, stocks and crypto, cutting bullish, okay? Simple. All right, so first things first, first things first we need to get into is the VIX, like always. So, all right, what's going on in the VIX? So in my last video, I said this. I said that we did sweep this low, and either we were right here in the middle. We were creating this blue vector candle, right? So pretty much what I said is if we're gonna close now, since we swept this, more likely we're gonna go to this high. But whichever one we close strongly and continue closing underneath is the direction we're going. So we closed above, recovered this vector, and now we are rejecting technically and looking like we might go lower, but I can't ignore this trend. We are slowly going up, and in my previous video I said that whenever we want to see a trend down, not a trend up. When there's a trend up, there's usually going to be an explosion. And when we zoom out to the weekly, what do we see over here? This recovery. So honestly, if we start getting this weekly closure above 22.87, it's not going to look good. It's more than likely we're going to come recover this, and that's a pretty big pump. I mean, there's a lot of tensions around the world that could cause it to go there, so I wouldn't be surprised. It's pretty reasonable that we could see it back at 30. If we go back here, yeah, I'm gonna be buying. Yeah, I'm gonna be going long. Yeah. I'm gonna start buying like spot Nasdaq and in the stock market, pretty much. So that's pretty much it for VIX, and I'm gonna keep it very simple. So let's go look at the data that we just got. Okay, and this is what's making me kind of wary or kind of confused, right? So let's see, Monday, not only in during February. So we are getting the data showing that we're getting less unemployment, more employment, and the manufacturers are getting business. That's good. So that's good for the economy. That slows down inflation. If it slows down inflation, then technically they should be cutting, right? Because inflation is going down. They don't need to keep money more. They have more liquidity to lend out money, right? But when we look at the data we just got today and yesterday, yep. So the ISM and the core PPI and PPI. Oh, and the manufacturing. So the manufacturing and the ISM, sorry, those two. That is telling you how they're pricing their products, and it's looking like manufacturers are actually raising their price on the products. So technically, yes, more employment. The manufacturing, aka the economy, is looking like we're getting business, we're getting money flowing in. But if the prices are going up while that's happening, it's just kind of like canceling out. So if it's canceling out, plus with this war stuff, plus oil, that's gonna raise prices on a lot of things. Inflation is gonna keep going up, guys. Like, at least for the current time where we are today, it's gonna keep going up. If it's gonna keep going up, then the Fed is not gonna cut. If the Fed's not gonna cut, it's gonna put a strain on the stock market and technically gold and silver. But the only thing that's keeping up gold and silver is the war. If this was happening right now, if this data was happening while the war was not here right now, gold and silver would be having much more of a harder time. Okay, I'm not gonna go over why that is, but just know that. Okay, so let's go over to Nasdaq. So in my previous video, I said the same thing. I said not the same thing. I said this. We had a breaker structure here. We went to the upside. We swept this liquidity. We were going down. I said as long as we stay above this low, we're still bullish, which we are. We did go underneath here, but we wait till the candle close. What confirms a break of structure is a full candle close. So Now internally in this range, we have been in this range for a very long time. This is the longest Nasdaq has been in this range for a while now, and its all-time highs. Here's the thing, I don't know really. Like right now, it's iffy. The only thing that's keeping me kind of safe when projecting Nasdaq or trading Nasdaq is just I'm just going based off just ranges. That's why I always like to trade ranges. So right now, our new current range is this right here. Let me put the range. Let me take this 50 off. But this right here is our current range that we're trading. Okay, we just been consolidating here. Look, right now it's looking good. That this is a good accumulation that's happening here to go higher, to at least recover these vectors. Do I think we're going to go all-time highs and make new highs? Right now, how everything's looking, I don't think so. I could see my preferred scenario for Nasdaq is we get one more move up, recover some of these vectors, and then come recover this blue. And hopefully, this is best case scenario, we get a accumulation model down here and we go higher, becoming a PO3. This becomes the range, the manipulation, and the expansion to all-time highs. Depending where we are at that time with macroeconomics and everything else, we could easily start going and recovering all these vectors below and all these lows, like just all these ugly lows, vector down here. Yeah, like we can. It's very possible, and it's not gonna be a bad thing, guys. If that happens, don't be too discouraged. Like we have been expanding for the longest now. Like come on now, since a whole year, and we haven't really had a pretty decent contraction, a little downtrend like this. It's quick, guys. Like it's not gonna be like this is pretty quick compared to the up. The move up is always slower. The move down is quick. Okay, so don't be too discouraged if we do lose this range and all that. Like just chill. But that's pretty much it. Now the new validation low, any daily closures under this low now. This is the new low. Anything underneath here, technically, yeah, we could come sweep this. If we don't get a wick here, this would be our SFP zone. Now with this new wick that just got created, this new low, this would be now my SFP zone. Meaning, if price comes back down here, it needs to be a wick. We need to have 0 candle closures in this zone. And the reason why I market like this, not a lot of people do SFP zones. That's kind of my own thing. Whenever there's a bunch of lows like that, and usually on the third one, if it's not a wick or closes in the middle, it's more than likely it's gonna come take this. And that's just based off just what I've noticed as a pattern recognition from marking the levels like this on my own turn, right? So yeah, that's pretty much it for Nasdaq. We're still just ranging in this consolidation area. We are still bullish. We did not break structure. Let's see internally what's going on real quick. 4 hour. What's our internal structure? Let's see. This was our low. Boom, boom, high. Yeah, we're just ranging. I can't really give you direction here. We are literally just ranging because we technically had a break here, but then we had a break here. So this would be our next area of interest. If we're gonna look for shorts, did we tap into it? I think we did tap into it because this is technically order block. No, we didn't tap into it. So we can right now, we can get one more push up here and maybe reject down back to the range low, recover this little recovery down here. Who knows? Right now, it's up in the air, especially with the stock market right now and the traditional markets. It's really up in the air, especially with everything going on with the war. It's a little bit difficult to kind of project where it's going to go. So you're better off just trading these local ranges, as in, like, for example, okay, start looking for shorts. We are the premium section of the range. Even though it might look bullish and go longer, if we're going to go range based trading, just put your invalidation up here just a little bit higher, because we do have an invalidation here, I mean a recovery here, and just trade to the range low. Just trade this range. Don't be trying to look for all-time highs yet. Don't be trying to look for the ultimate short down to whatever. just trade the range. That's it. That's the best thing I could say for Nasdaq, really, in the longer term. So moving on to the metals. Look, the only thing that's keeping up gold is, like I said, it's the war. It's not slowing down, and they just now kind of gave Trump the heads up, or not the heads up, the green light to just pretty much do whatever the fuck he wants. Like, they're not gonna stop him. Just based on this article, this isn't just speculation. Yes, like they took a vote. They said that yes, it's legal now, even though he did it without even asking him in the first place. But whatever, it's crazy times we live in. Pretty much the war's gonna keep going, so gold and silver are gonna continue higher. Okay, so now let's go over to the gold charts. Look, make it simple. Weekly time frame. This wick right here, this is pretty much like we need to stay trading above this low. But if we zoom into the daily time frame, we are still in bullish structure. This was a high we needed to break to continue higher to recover this vector. Like I said, since I started my first video about gold, I said we're gonna come recover this vector. I always said it. We were, I think, like right here. I said, look, I'm still bullish. I still think we're gonna come recover this. Like, it's gonna happen. We did. We just did the full recovery, recovered fully now. So now what I'm seeing now in this daily structure, let's mark it out. We did break to speed it up. We did break to the downside. We had that up, down, up, down, up, down, boom, break a structure. Was this a full day close? Hold on. This might be an SFP. Oh yeah, no, it was a full day close. So since this was a confirmed break of structure, we had a full candle close. Now what is the next expectational order flow? The next expectational order flow, dang guys, sorry, is since we broke structures to the downside, is what, to make a lower high. So I'm anticipating we're gonna recover this vector and then go down lower. Okay, my line in the sand right now, personally, this is my level right here. This is, let me get out a different tool. This is my level right here on gold. If we get underneath pretty much 5k, 4,841, any daily closes under here, yeah guys, we're gonna come down to this wick and more likely come down to this very bottom wick. But like I said, based off what's going on with the war, I don't think that's gonna happen. I think that we might just continue lower, maybe go to this order block right here, go into this order block right here. Did we tap into it already? Yeah, we technically did tap into it. So maybe come back down, like so do something like this. I could see us easily recovering this vector, going back down, creating vectors in this range, or creating vectors on the way down here, and then accumulating again and going higher. Okay, as long as the war tensions keep on going. So that's pretty much what I'm looking at for gold. Let's see silver. Okay, so silver, we got into this trade. I started adding into the trade. I closed the trade at right here. I closed the trade at 89, which was pretty much a pretty good close. 89, yes, it was around here. I saw this red vector candle at the 50, and that's kind of gave me the trigger. Yeah, let's get the fuck out, because this is looking like it's gonna go lower, which it did. But currently now on silver, I'm gonna get into another silver trade if I'm gonna go with the idea of war is gonna continue. I'd rather get into silver than gold. Silver just moves much harder. This trade is closed. It's profit, so let's get this out the way. Same thing. Let's see on the daily what's going on. Yes, we had a confirmed break of structure. So now our flip invalidation is this low. That's 72 low. We did break structure locally, internally right here. This is confirmed break, much clearer here than gold. So again, what is the expectational order flow now, since we are bearish? To make a lower high to go lower, and hopefully the target is this right here, this order block. So I am anticipating possibly for price to do a little move up, come down, accumulate, and then distribute and recover this whole vector candle. And this is why I prefer silver, because gold already recovered its candle. And also, real quick on gold, the reason why this is pretty important and scary for me is because if we start closing underneath here and start accepting underneath here, this can easily be the cycle high for gold. And then we could go straight the fuck down all the way to 35. We could easily come back down to this range, easy, to 3,500. So if that's the case, then this is the high for silver, and we're gonna go the fuck back down all the way and take all these gains, go right back down to 40, 50 bucks, easy, easy. So that's what I'm looking at for the metals. But again, I am not too afraid about the downside because the war. I'm not gonna. I already said it like millions of times. Okay, moving on to cryptocurrency. All right. So recently, this is very. I want to say too. It is bullish for crypto because it's pretty much giving adoption to the blockchain and cryptocurrency, but it's not bullish like you think it is. So this pretty much benefits any stablecoin issuance. Obviously, Trump's main goal in crypto is to stop people from taking profit on USDT. And I'm kind of sad about that because one of my main confluences on trading crypto is USDT. And if his main goal is to take that away and people start using USDC, then that's not going to work no more. Hopefully, it correlates over to USDC if that becomes the new meta, pretty much. But anyways, so this benefited cryptos, which is this is a stock, Circle. Okay, Circle Internet Group is pretty much a stable coin issuance. I've been buying. I think my average entry. I am still underwater, but I think I'm like 109. Yeah, so I'm about to break even. I've been adding on the way down because I did buy up here, and this is why, like, if you follow me, I always talk about the 2020 2040 method because I have a bad habit of buying at highs. You know, I am a retail trader. You know, retail, we are stupid. We buy at highs all the time. So since I have that problem, I'm like, okay, well, since I know I am peak at buying highs, I know for a fact going light, going light. 20% here, put my 20% here, 20% here. And since we're gonna get this confirmed break, because this is a weekly time frame, because not only do we're gonna get this break in the next 3 days, this is a strong ass candle. I don't think we're gonna go lower. This move up has been gaining volume. This little stopping volume candle, it tried going lower. It became a stopping a volume candle because it became a vector candle also, and volume was much higher than average. And this move up, volume is also getting much higher than average. If we go into the daily, same thing. Obviously, the daily already broke structure. We're already in a bullish trend. Like, this is going straight up. We are easily going to go back to my entry, and I believe we're going to take its all-time highs. I think if crypto continues with its rally currently, which I think it is, this is going to easily go back to at least 150, 155. This is a long-term play. Even though I went down to like a 50-60% drawdown, this is one of the only cryptos, because it is a stock, it's not just a cryptocurrency, guys. It's kind of like Coinbase, okay, but they work with stable coins and it's not a exchange. So with all that being said, was a long-term investment for me. I have a pretty heavy bag in this. But yes, not financial advice. I'm not a financial advisor. Come on. Look at me, guys. I'm not no financial advisor, guys. It's just my own research, my own analysis, okay? But anyways, yeah, this is a long-term play for me. As long as this benefits, like Trump, Jesus Christ, if Trump's gonna keep on going with this narrative and gonna become the crypto country that he wants to be, whatever, if he becomes successful, then this is an American company and they're already doing a lot of contracts, or already have a lot of partnerships. This is gonna be, yeah, it's gonna be a top gainer. I think it's gonna be like Coinbase. Like, this has the possibility. Okay, enough of that. If you were gonna try get into entry of this, yeah, I mean, it's going straight up. Like, it's either get in now with a low position and hopefully you get a pullback. Right now, yeah, any pullback I'm seeing, like, I don't buy like this. Like, I try not to buy when charts look like this. But yeah, I'm waiting for a pullback to add my last 40%. Um, all right, moving on to USDT. Okay, so this week is obviously going to close bearish, which, I mean, if in less than 3 days we completely rip out of here and this closes positive, yeah, this is making a new all-time high easy if that aggressive move. But anyways, since I'm already anticipating this is going to close bearish, the good sign is that now we have our new high to invalidate our longs on crypto, at least, which is now this high. Obviously, after the weekly close, which I'm already anticipating is going to be bearish, this will be confirmed that this is a for sure invalidation high, as in like a flip zone. Zooming on the daily, this low was down here, so we did get a full daily close because this was the low that we needed to close under. We did get a full daily close, which is a good sign. That means we are now currently bearish. So now what is the anticipation? A lower high to go lower. We have this red vector, so right now in the midterm, as in like this week or 2 weeks, I'm pretty much anticipating this move, a move up, staying underneath this new high. Pretty much any move above here, and we need to get a lower high to go lower, or a quick sweep again at SFP, take the little bit rest of this vector and then go down. But it has to be a wick. This has to be a wick. If it's a full daily close above this high, I'm getting out of all my longs on crypto, at least. That would be, yeah, I'm getting out of my longs. But yeah, so pretty much we are anticipating on crypto pullback to go higher. That is my overall plan. Okay, so moving on to Bitcoin, and Bitcoin is currently going to recover its vector candle. So this can be technically a bull trap, but the reason why I'm not putting a lot of weight on the possibility of this happening, because there's a lot of people on Twitter that I'm seeing that are doing this. If you guys know anything about PO3s, I'm pretty sure you guys seen a few PO3s on Twitter. This is one idea that I'd be seeing a lot. Everybody's still pretty bearish, even though we are finally getting that rally. A lot of people are marking this out right here. Boom. This is our range, our manipulation, and then our expansion. That is what I see some people posting about, and the bear side of this breakout, pretty much. It's valid. It happens a lot. We have the liquidity generating. It's just like up here. This was a PO3. Like, let me show you this real quick. This was also a PO3 up here. Range, manipulation, expansion. So it happens a lot. Crypto does this often, but the reason why I don't think this one is gonna happen is the context of where we are right now. We are very overextended to the downside, and even if we're going with the logic of the cycle pattern, which is this, where cycles work off 3 waves, as in like M formation, break, level 1, retrace, continuation, level 2, retrace, continuation, then we make level 3 and go up. Pretty much the cycle pattern is that we have our M, we make a level 1, level 2, and usually we reverse on level 3. But it's like a 70% chance that we do reverse off level 2. It doesn't always have to be in 3 waves. But what is going on here? We are in an M formation, break. You could technically say this was the first retrace, but let's not include this. But even then, break, retrace, continuation. Now we are in level 2, and we have a higher chance at level 2 for getting that bounce. So this is why I am not putting too much of the PO3 on this area where we are right now, based on the market context. We have been straight down, guys. Like, the bears have been just printing money. Like they just been shorting and not being punished whatsoever. We left a bunch of liquidity, so much vector candles. So with that context of the market where we are right now, that's why I don't believe that this PO3 is going to work out and we're going to go lower. I think what's going to happen is more likely that we are going to get that rally, like I've been saying, go into this zone. Best case scenario, honestly, my preferred scenario is to come back to 104, 103, because we have this zone that we did not tap, because this manipulation did not tap this order block right here. Right here. It did not tap into this zone, which that tells me this was inducement. It didn't. A lot of people were waiting for this zone to be tapped to go shorts, so a lot of people got front ran. So that gives me more of a confluence, since this is a very important zone, that we're not going to make a lower high here. It's very possible. Wait till price action develops, but this gives me more confluence to aim for the higher SFP wick out here and then go lower. So either this is going to happen, boom, boom, reject there, or we are going to go all the way up here, wick out this high, and then go down. Okay. But yeah, pretty much I'm still bullish. And to give the invalidate, and another thing to give more context of why I'm bullish here, if we zoom out to the weekly time frame, what is the volume telling you? We zoom in, this stop in volume candle, any like I guess you could say this is like a doji or a hammer candle where it's just like body and then wick, no top wick. When you see dojis or hammers but they're vectors, though, that's a stopping volume candle and it's a above average, this is a very good indication of reversal. Okay, and right now this day hasn't closed yet, or the week, but more than likely we continue with this pattern and we close closer to the vector recovery, it's going to be above average. So participants are backing this move, so more likely we're going to come into the zone. I think we're going to come to the zone. So yeah, I'm going long. I'm still long. But zooming into, where is my validation? All right, so what is the line in the sand where I'm going to be like, okay, this is going to be confirmed that the PO3 is playing out? Because remember, we zoom out to the monthly time frame. In the previous video, I said that this low, we need to close the monthly above here, above 74K, which we did not, which is fine. And like I said in my previous video about the monthly close, even though we close it down here, I'm not anticipating we're going to take out this low just yet. All this is telling me, if we get a closure underneath here, we are for sure not going to all-time highs on this rally. We are for sure not going to all-time highs in this rally. So do not, if we get back here, people are going to start getting excited. And this is why I think going back to 102 will be perfect, because it will get people to flip bullish and be like, oh, we're going to all-time highs. Yeah. And then just trap everybody and get fucked and come back and recover this vector at 42K. And that will probably be the bottom of the bear market, either at 42K or this order block right here at this 20 to 30K right here. But yeah, that's pretty much it. So moving on to Sol, let's see how Sol's looking. Yep, finding really good support, getting a bunch of wicks. Let's see a volume, getting above average. Let's zoom in. Oh, sorry guys, let me go back to Bitcoin. Let me give you the invalidation. So if you're in Bitcoin longs, my get out point of any longs right now is, okay, let's mark our structure. Let's see, where is our flip? Boom, boom, high, low, high. This is our most recent structure low, okay? Because this low was the last low making a new high. This low was the last low before taking out this high. This low doesn't matter. This is just liquidity to me. That's just how I see it. So pretty much this level right here at 60, this is my line in the sand for any Bitcoin longs, 66K. That is my invalidation low. That is my flip low. if we get any daily closes underneath here, or we start getting acceptance underneath here, yeah, I don't think these lows are gonna hold, and more likely we're gonna come down to the wick. Okay, and then this is a successful PO3, and we're gonna go down to make level 3 of the cycle. Okay, remember, just because we are in a level 2 right now, but like I said, when we're at level 2, the probabilities of it reversing is still kind of there, but on a level 3, when you have a clear breakdown to level 3, confirm we are for sure reversing. I will bet my left nut that it's gonna reverse. Okay, so invalidation is 66k. For Sol, let's zoom in. Same thing, we're getting volume. Like in all these coins right now, we are getting above average volume on this rally, so which is a good sign. So let's see what would be my validation on Solana. Let's see what is the structure. Okay, high, boom, this is the new high. Let me take out my high, low, new high, low. Yep. $78. Pretty much still, we are still technically in this range because we are slowly breaking out. But as more price develops, then the damn, I can't talk, guys. What the fuck? The invalidation though goes up. Okay, as more structure starts developing, this starts to move up. Okay, but currently, right now, where price is at, yeah, Solana could go all the way back down to 70. Yep, to 77. That's still 14% range. But anyways, this is my invalidation low where I am getting out of Solana. Whatever Solana longs I have, I'm getting the fuck out. But again, I'm still bullish. ETH looks hella good. ETH looks amazing. I am in a pretty heavy ETH long. My position is, yeah, I have a pretty good position. I'm really happy about this one. Same thing, above average volume on this break, and we're continuing to go above average, even though we are tapering down. It's still above average. Okay, but yeah, let's see what it where is in validation.
It's not a coincidence. Something powerful is moving in the invisible.
What is our structure? Always structure out. I don't, in crypto they say when in doubt zoom out. I don't say that. I say when in doubt structure out. Okay, what is happening? Down, down. We swept that high. That's why I'm marking this as a new high. Low. This is the last low before making a new high here. So yeah, invalidation on ETH. This level, 1,835. Any longs I have on ETH, getting the fuck out. So real quick before we move on, I just want to say in these videos, in these market watches, I'm not going to go too in depth on price action and give you exact entry zones. I want you guys to learn how to trade. If you guys want to know how to do all of this, like mark out order blocks and all that, go into my YouTube channel. And I know it's my first video, so bear with me. Just go to my beginner trading course. I literally go over everything I'm yapping about right now. And right here's a timestamp of everything: candlesticks, time frames, market structure, liquidity, SFP, market, everything. Okay. In the future, I'm gonna redo all this because you know a lot of mistakes were made. But in these videos, I don't want to be like, hey, like we have an order block here, so the long trade will be here, validation here, and then we have another one here. My entry, I don't want to do that. I want to teach you guys how to trade. I don't want to hold your hand through it. Okay. If you want that more, then follow my Discord. Keep on following me. And if you want access to my Discord, right now it's all free. Eventually, I'm gonna privatize it, but everything's free right now. Go to my YouTube channel and my link tree. I got my my Instagram, my YouTube, my X, my Discord down here. I got all that. Okay. Yeah, I'm not as active because I don't have that many active users on here yet. But once I get those people that are gonna watch my stuff, I'm gonna start doing private lives, one-on-one sessions, all that. So yeah, moving forward to this new segment I want to add to my show. This is gonna be, let's find a quick trade. Let's scan the market. So this is something that don't worry about what this is. testing it out. So let's see if we can find a trade now. Let's daily time frame. Let's scan. What is going on? All right. Is there any signals? Any signals? We got a long on IP. Let's see what the AI is generating for us. RSI is 3. Funding. Yeah, the only thing that's giving us a buy signal on the daily time frame is this. Let's see how it's looking real quick. Let me take all these indicators off. Like I said, when in doubt, structure out. So let's see what's going on with this structure here. Boom, down, down, break. So this was a sweep. We have a bunch of wicks, so technically this could be a SFP, but let's say there's going to be a confirmed break. So what is boom, boom? Yeah, this would be our invalidation though, because if we break underneath here, this low is not going to hold because this was an order block that already tapped into this. So likely we're going to go into this order block, but this order block created this order block. So now the less, yeah, we're more likely going to take all this. I don't think this is going to hold, especially this token that's beat the fuck down. Yeah, I mean, it's not a strong token, but I mean, with the token this beat down, this low, the chart, all this resting liquidity, I mean, it is gaining a pretty good accumulation model. We have, let me zoom in more on the low. We are on the 1 hour. Yeah, this looks like a pretty good accumulation. We have 1 tap, 2 tap, 3 tap expansion. So this would not be a bad trade idea. If this is our validation low, let's see what's the percentage. 2%. I have a really small account on this platform because we're just testing it out. 2%. I only want to risk max loss each trade.
I can turn your wildest ideas into a song.
What you call it? I want a max loss of $5. So
with one click, Eureka V8 transforms your thoughts into a studio quality.
Just for a starter position, I'll put a $100 value position. Can only do only max 3x. That's fine. I'm gonna put a $50 position first. Just place my order. And we're gonna get out at 8:56. So there's a platform I'm testing out. Let's see how well. Let's see what it's telling us. So on the AI brief, same thing about saying IP is a good. 84 is our validation. I wonder if that's the same level that I was thinking. Oh yeah, it is. It is pretty much the same level. Oh, that's actually not bad. It's actually pretty decent. Yeah, so there's gonna be a new segment on my lives. I'm gonna test the scanner. We're on the daily, and I'm gonna keep looking for trades here and kind of go with the journey and see how accurate and how well it performs. So let's see. This is gonna be our first trade on this new segment on the show, IP. So let's see. We're gonna follow it. Have a small account size. Let's see how much I could build this $20 balance. But yeah, yeah, guys, that's about it. So in conclusion, to wrap it all together, make it real simple. Right now, the traditional markets to me is not in a clear direction. If I'm gonna be honest, it's been easier for me to trade crypto. The only thing that's been good about the traditional market is silver and gold, and it's because of war. Right now, with the data, it's just too much going on about the AI bubble and the new storage. But I will say this: if you want to look at a stock asset class for the future, for the long term, research into data centers. A lot of these AI companies, they already master the software. They don't need to improve the software. Software is there. What they need now is the memory and the storage and the power. So data centers. So not only research data centers that are doing contracts with these AI platforms, but also look at energy producers that are getting contracts with these data centers. Yeah, I'm gonna start doing more research, and I'll drop some stocks that I'm looking at. Not financial advice, but this is going to be an investment play. Do not expect this to see returns anytime soon. Remember, we are in very uncertain times, but right now AI is not going anywhere, and it's not going to slow down, guys. And it consumes a lot of power, so they have to, if they're going to keep this around, they have to invest more money into storage and data centers, period. They have to. So it's not a bad investment in my opinion, and that's how for my logic, for me to validate why I would put it in my portfolio, that's my logic. So with that being said, make sure you follow my socials and make sure that you subscribe, like my shit, and yeah, I'll see you on the next one.